Hello everyone and welcome to my weekly update with me, Rich Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, back end of last week we saw a real acceleration in the dollar selling, and we've had a big move to the downside driven by selling throughout the last few months really, but it's sort of accelerated by the euro strength that we've seen on a breakout to the upside last week. And the political risk from the Trump administration continuing to sort of dig holes for itself, and it is continuing to pile pressure on the dollar to the downside. Now you've seen the dollar trade weighted index, which is coming back towards key levels 92 to 93, which has been a massive floor on the dollar trade weighted for a couple of years now, and it certainly seems to be that is being tested. That you could equate that to sort of euro dollar testing up above the 117 area, if that were to be the case. But certainly dollar trade weighted is a big factor here. Now what we've got this week is we've got the Fed coming up. It's not expecting to do anything on monetary policy this week. You haven't got a press conference, and you might get some tweaks to the statement, but more than likely it's going to be a bit of a non-event this week. But there is a possibility they could start to sort of play around with the wording and try to factor in the prospect of running off that balance sheet that is going to be happening supposedly towards the end of this year, but we're not expecting a great deal this week. We've got the growth numbers for the States and the UK this week for Q2. First look at those numbers. That will be interesting because Q1 was a little bit of a disappointment, although Q1 is always a bit of a disappointment for the US, but certainly Q2 is expected to pick up 2.5% according to the Atlanta Fed GDP now forecast, nowcast. But is that enough to sort of generate some real sustainable growth? I mean, Donald Trump wants 3%. I can't really see Donald Trump achieving 3% with his current woes that he's having in Congress. He can't even get through the healthcare bill, let alone sort of put through some dramatic changes to regulation and also fiscal expansion. So what we have got is these growth factors that again play out on the dollar once more. The dollar weakness is playing out through the forex markets, through the commodity markets. We're also seeing concerns on the equity market, certainly in the eurozone, following on from the strength of the euro, the DAX being a main sort of factor there to play out. But yeah, just watch out for some of these moves on these equity markets now. So in terms of forex, we've got moves on the euro which are broken to the upside. Now euro is sort of consolidating a little bit on Monday, but certainly I think corrections have to be seen as a chance to buy on the euro dollar. We've seen the continued uptrend. We've seen sort of move back towards breakout levels continuing to be bought into. 117.11 is that August 2015 high. I think that's going to be tested in due course. As I said earlier, that sort of equates back towards that 92 to 93 level on dollar trade weighted index. Euro is around about 56% of the dollar trade weighted. So in terms of cable, it's interesting that cable has reformed a little bit of support, higher low sort of coming out again, and it sort of looks like it's testing the 30 to 50 resistance, that 50 pip band of resistance. That is a bit of a sort of a pivot really, and I think above that we're looking positively higher, strongly higher once more, and then we could start to think possibly even about breaking out once again. But for now, it's just testing the waters. In terms of dollar yen, falling away, dropped that 38.2% fib level. Now looking towards the 50% fib level, which is 109.35. That is a key level, and the June lows around that 109 figure area, 108.80 being the key June low. So we've seen some key moves on this dollar weakness that is affecting across these forex majors. Now the equity indices, as I said, European markets are under pressure. You've got the strength of sterling, the strength of the euro against the dollar, and that is affecting these markets. Certainly the DAX being the chief move to the downside, big downside break on Friday, continuing to downside move today, and it looks like it's under pressure. The exporters are under pressure to the downside. Now in terms of FTSE, a little bit less so. It's testing an uptrend. The uptrend that has been in place for the last 8 months is under pressure, but I think at the moment FTSE is on a better technical footing than the DAX is. However, I think certainly it is being put under pressure again this morning. Now the Wall Street markets are an interesting one because they are being driven certainly or supported by earnings season, which has started pretty well. The tech stocks are still going to be a big driving force there, but earnings growth in the US still around about 7.2% is the expectation for Q2. That's pretty decent, despite the fact that we've got some pretty lofty numbers, valuations on these markets. Still fairly reasonable earnings season that would be seen. So what we have got is S&P 500 and the Dow both sort of hovering around their all-time highs, not a million miles off them. Yes, they could be pulled back as the European markets have gone, but I think that would ultimately probably be a chance to buy, to be honest. But it would be interesting to see if the momentum indicators continue to hold up. So what about the commodity prices? Well, the weak dollar has helped to drive gold price higher. Gold is in this big range really between 1200 and 1300. Midpoint of that range, 1240 to 1260, two pivot levels there. Break out above 1260, you're looking at 1300 again. I think it's that simple because the momentum indicators are pretty strong on gold and continuing to improve. In terms of oil, it's interesting because the supply argument is a real issue. It seems as though that the supply-demand balance is not coming back into balance as quickly as the OPEC countries had been anticipating. Also, we continue to see increases in US production. We've got a meeting this week for OPEC. It doesn't look like they're going to be able to sort of change or do anything with the Nigeria, Libya increases in production, so that doesn't really do a great deal for the price there. But certainly the resistance levels on the technicals, 47 on WTI and $50 on Brent crude. So what about economic announcements this week? Well, we've got US consumer confidence has been falling a couple of months in a row. Will it start to sort of find a bit of an upswing again? Certainly, consumer confidence is at record levels, but a couple of months of downside on consumer confidence for the States, not a great trend if that sort of continues to develop. We've got Australian CPI perhaps sort of holding up above that 2%. Would that sort of help to support the Aussie? Maybe well. And also we've got UK growth. First look at Q2 for the UK. It's expected to be 0.3%. Certainly not shooting the lights out there. We had that IMF report that suggested that UK growth is a bit of a disappointment for a drag on global growth. And it certainly seems as though that 0.3% for Q2 is not going to be all that great. Now, then we look towards the Fed on Wednesday evening, and then on to Friday we look towards US growth. As I said, 2.5%, 2.6% is the expectation annualised for Q2. Again, not great numbers, but certainly it would be an improvement on that 1.4% on Q1. So lots to drive these markets this week, and I wish you good luck in your trading, and I will speak to you next time. Thank you.